seems like you know what you're doing. But then I have a question, bro. There's something I don't understand. The market is always moving, you're right. It's moving like it's buying, sometimes it's selling, sometimes it's considerate, all the stuff, But what makes it to move? I know there's effects like economic news, exchange rates, or there's a lot of them that affects the market so that it can move like buying and selling. How to know those things? I wanna know, bro. This thing. I know price action, but it doesn't tell us much about how the market affects it. I wanna know, bro, why we're selling, why we're buying, and when to sell, when to buy. By looking the news release or something like that. Yeah, news release. I know, but I'm sorry, it's not the time for teaching. But it's just a question.
Okay. Hello. Thanks very much for the question. You said what actually moves the market. Okay. So now, to me and my team, we believe that market is moved by the big money. Friend like this. When I say friend like this, I mean like these are the two people who will forever move the market because they have influence to manipulate it. Okay. Now, who are these big money? Big money don't make rash decisions. This only means that we use bigger time frames to week off most of scalpers and swing traders using the very same terms information provided to you. Okay. Now, same time, we are grateful to stand out for people who play with paradox. I hope you all understand what paradox are, right? Paradox is when now you never get to be wrong. You always right on point. Now I can say now, I have your sweet. Now you tell me, will I give it back to you? If you give me the correct answer, I'm gonna give you back your sweet. Now you don't know if you said yes, and I said no, I wasn't gonna give you back. Now you're wrong. If I say yes, now you're right. You believe me? Now, you get me? Now, you get to be right almost every time. Now, below are the two big friends, the market maker. Now, this is the man who actually made the system, right? The man that gave the information to his best friend, the broker, okay? To kill us, the retail traders. Now, if you think very carefully, or if you get to think, the forex market has been running, or the currency pair market has been running ever since you can ever think of the process of the monetary has been introduced, right? Why? Because we have to weigh a price against another price. Okay. So now, what did the broker do with the information? Now the broker also want to benefit, and remember that the broker is one of the biggest manipulator around the world. Now he's a man who gives you more information, knowing very well that the creating loophole in every single information provided to you. I've met a lot of traders who are saying that when they're trading with information provided, they get to have profits, but at the end of the day, they make a losses even if they are consistent, even if their strategies are powerful, right? Why? Because brokers are the most deceiving group with a tie. Now, they're gonna introduce you forex, that the forex market is existing, give you a bonus, right? A bonus that you never withdraw. Already now they started right there. Now they're gonna tell you if you deposit this, they're gonna give you this, right? They even give you webinar classes to explain some of the information that the support and resistance. This is how we actually make money out of support and resistance. You wait for the breakout, blah blah blah, right? Now they give you information that is actually incomplete. Now, we're trying to understand the voting decision that the market maker is always having and be biased with it. We want to know where the market is going and follow the trend. Okay? If you see that since the market cannot move unless unless the market trend. If the market is not trending, remember that we're only having two pressures in the market. We're having a buy pressure and we're having a selling pressure. Okay, so when the market is selling, we know that now the selling pressure is more than the buying pressure. This is just like a numerical format of things. If I say I have 60% this side and 40% this side, so now the probable chance of the 60 side winning is already above this one, meaning that they are winning over this price. Okay, so you can think of it that way. Now we use the same information to create hidden points about the information many traders are not aware of, a true structure that defines the formation of a trend. Now, a lot of people don't understand what a trend is. You know very well that the trend looks like this. Let me just find a cleaner chart. Let me just do this. Go back. Maybe create a new one. Okay. So now, you guys don't understand what a trend is. You just know that a trend exists. Okay. So now, a trend, when we told, is created of support and resistance, breakout and continuation, breakout, blah blah blah. Right? We are told that from here to here, this is our key areas. This should be our resistance. This should be our support. Now, once the market breaks above this structure, now this becomes our resistance, our new resistance. This area becomes our support. Right? This is what we are told. But then there's too much to can tell. There's too much to can tell from this information. I can tell that now the price did not touch my support. It means that the price is not a trend. This is not a trend. This is bullshit. Okay? You have to understand such things. Because now when the market is coming back to test, they want to test here. But rather, they'll come and retest again here. And they'll even be true to test here. Now, they'll be taking everyone who's here out. And everyone who's here, they'll definitely week off the area as well. Before continuing, telling that everyone that now we are sellers. Before continuing forming a proper smaller time frame trend whereby the market will be creating the red areas. So now all you need to understand is to understand where is your resistance and where is your support. Why am I saying this? Let me just link this board quickly. I'm saying this because a lot of you guys don't understand that every single trend that we're having is going on between a certain resistance and support. Why? Because these are the two areas that the market prices and between the two countries now they have agreed upon. Okay, so between these two areas in a chart format now will be like South Africa against New Zealand. They'll be buying that in 5 rands. Okay, so now when the market is starting to move, we'll be having enough buyers. People will be buying the rand. Now the price will start to move up. Right? When the price is moving up, now others are selling. Oh, now this is we sell when the market is high, and then we buy when the market is low. Right? So the price will go down. Once they get here, South Africa believe that they don't want that price to even get lower, so they'll buy the market higher. So now the price will be just moving around these two areas in the meantime until they do what? Until they break out. Break out and continue. Okay, so now if you look at the structures happening inside the support and resistance and support, right, you will find that the same very move that is like this. Okay, look what will happen in a real chart formation. The market will be doing this. Okay. I just need to back to my chart. Okay, on a real chart the market will be just pushing down, creating this, cause now the market will be having two things happening: a selling pressure which will be taking the market down, and a buying pressure that will be trying to push the market way up. So now, the different styles of trading, right? That's why we say support and resistance are the most nice for keys to trade, and trading a supported trend becomes even better of that. Right now, let me continue to show you what will happen. Fail to break this high. Now the market will reverse, break down, start to create another trend. Now they can just go here, figure out, consolidate a bit, break out to break this side. Now this is the same very thing that happened on the above side right here. Okay, this is my resistance, and then down there, here is my support. So now, one on a different time frame will be seeing this as a consolidation. On a bigger time frame, the market is consolidating between the two areas, the two prices. So now, once the market breaks out of the supported and resistance, the agreed price, now the market will turn this area here to be our new resistance, but only if the market now push back to this area, tap it to continue. Let me just draw it here. Breakout, test to continue. Remember, the market can still come here to even push back. Now, you also have to understand the co-influence between the time and the structure. Yes, you can trade fundamentals at any point in time. You can trade it. You can trade fundamentals. Don't just shoot out. This is just a brief news. But then, when the market is moving like this, let's just say the market was like this, was like this, was like this. Okay, something like that. So now, when the news happens, they happened when the market was at the lowest area. Okay, most of people will buy because the price is low. They will think that the report will try to shift up the price based on the performance of whatever, maybe the inflation rate, whatever that will be affecting the market at that point. Maybe the decision made in the political structures, or maybe the bank statements, GDP, whatever. It will influence the price to go up if only they performed better. Now, you have to understand at what area the resistance, the support, at what area the market performed well while at. If they performed well while they were here, and the market in another case rallied down in the meantime, waking everyone out, they will use the very same news to shift back the market to this area right here. That's why a lot of people want to trade after the news. Now, they don't specifically trade the news, but they trade after the news. Why? Because they want to trade the pressure resistance. They want to trade the pressure that will be created. Because looking at these, we know very well that the market performed well during the period of our economy, in fact, during the period of lockdown. So, but then the market never really spiked up to show that we did good during the 2 or 3 period of that happening. Whenever we're having news regarding that, I'm gonna be quite sure now the market will shift the price higher. I'll look for a smaller pattern, maybe on a 1 minute or 5 minute time frame, and I'll use that structure. Remember that even during that, the friend of the market maker will increase the spread, to give you the bigger one, so that you don't really benefit even if you hit them, on the right direction. Don't make sure that we suffocate in all directions in order for the market maker to kill us. Okay? So every time when you understand of market that is ranging within the same areas, boom to this area, boom back here, boom back up here, boom down here, already you notice that the market is going it's moving sideways in this price. Okay, in another case, someone will see that as something like this. on a bigger time frame. Another one will just see a mere candlestick on another time frame. So you have to understand that market moves in trend over time. That's why the confluence of time and trend is so important to identify our structure. Remember that during the London session period, that's when you find our market being like this in most cases on GBP/USD, right? During this period, we're quite sure that when the London session opens, the market is either gonna spike to this side, come back, retest, boom, continue. Okay? Oh, sorry. Continue, right? Or rather, the market can also shift from this price, boom, to breaking the low side. Let's go to our low side. Yes, just like this. Break this side and never even retested it. Continue going down. Okay, so during the period when you're seeing this as a consolidation, someone will tell you that it was a period whereby GBP economy GBP economy was closed. The banks were closed, the USD as well. People were sleeping in the country during this period. The market is not really active, so they agreed upon a price. This gave out the price during that closeout, and then this will follow it. This one they will follow it until they open and should to shift the price. If when this one comes back in, find the GBP on a different position whereby they did not agree on, let's say, let's move back everything to show you what I'm trying to say. Now, during the GDP session, London session, okay, when the London opens, the market may spike up, like I'm saying, go up. But the market, between the two markets, USD and GBP, they agreed that they will play around this resistance and support, right? They will not move out of this price. They will just keep on fighting around here. So when London comes back in, when US comes back in, they will find price up here. Now, they never agreed to this price. They don't want their market to be losing value like that. They want to come back in when the banks are opening, disagree the price, push back the price to this area, push it back to show them we're not agreeing to this price, start forming a new trend right here. Then we're just gonna follow the trend. Once it started, enter, put our stop loss right about here, forget about the trade. We know very well that they will either push the price to this area, or even better, they'll force it out as well. So these are some of the areas that you can use to buy in the market. If only if only you understand what a trend is, what the market is all about, then now you'll understand these things when time goes on. It took me many years to also understand. And guys, thanks very much for keeping on giving me questions on daily. That also help me to be more precise, okay, when I'm explaining these things. One of the reasons why many traders fail to make consistent profit is because of less or lacking of knowledge about the market structure. Well, this more advanced method about the trading structure or price action they'll help analyze the methods and understand how to use them so that they can give at least 90 to 95 accurate decisions in most of the time. Because now you'll be following the same person that we talked about, the two friends like this, the market maker and the broker. Okay, now continuing from that, to to really understand the price action, it means that you need to study what happened in the past, observe what is currently happening, and that's what I said, and predict where the market will next go using different patterns. They told you that the market is moving in patterns, right? You can try to find few patterns out there, the flags, the pin bars, and whatever's in trying to like understand where to buy and sell. I'm not really gonna give you the true answer to that, but then I'll try by all means to help you guys understand that. Okay, so now let's continue. Remember that the most important reason why we want to have a profitable strategy, it is because we want less or losses, and you can't go to a battle doubting that you will win the battle. No. But in forex trading, we are taught to follow patterns, candlesticks, and so forth. But to me, I think it's just all nonsense. This is just a system I believe they want to use to kill us. Okay? For myself, I believe in a systematic way of things and the automated process. Meaning what? Meaning that if something has to happen, it must be in an automated format. Why? Because now when you do something consistently, is when you get to do it better, right? So even when the structure is moving, they do to make mistakes to fool us and then kill us, but then they know how to move the structure very well, right? But what confused me at my early stage of trading is that I had to listen to one statement flipped in many ways: trading is art, but never understood the true meaning until I see test for results and noted the picture painted and how to complete it. As to say we can only buy or sell, no problem. But then the problem is where. Trust me, best strategy for me foundation is understanding positionings. That's what I was talking about earlier, and that are out to give best results and making sure that every trade we take is never our last. That's the main thing that you want to understand when you're in the trading market: protecting your account and also making sure that you're having a strategy that you understand. It will give you better positioning. Now you know where to position yourself when you have a strategy: either a swing trading strategy, a scalping strategy, or ranging strategy, breakout strategy, whatever strategy that you can find out there. They're different, they're many. Okay, now let's continue. Well, backtesting is always the best option. Always remember that we're not wrong until we realize our aim mate, right? If you make a mistake, you're never wrong. You don't understand if you're wrong or not until you realize that I made a mistake. We can continue. I've seen many traders funding their accounts every single time when they want to trade, but they never on the chart. How can you beat this? You found us here. You just want to come in 3 minutes in and already become a millionaire. Now, I believe in the systematic format of doing things. Remember, the more you do this, the more you practice this, and backtesting is part of that. It's the best option. Meaning that backtesting helps us to find our likelihood or ways to sustain our accounts. But never worry. Okay? Because blowing is growing. Every time I deposited money into my account, I kept mentality of ICU healthcare. That's how I treat my account. I want to give it the best care to make it. To make sure that it is alive. Imagine if you give a normal person ICU healthcare. The person will never get sick. The person will never, even a single time, go through any health issues. So sometimes we hate the process and ended up not understanding it. When we want profits, when we want to chase those big traders who are out there showing you money every day, now you're also have to remember that your account are not on the same margin with theirs, meaning that their profit and your profit will never be the same. The risking threshold and yours are not the same. So you have to understand that. Because trust me, losing money and time is not easy. But not letting your emotion influence the strategy. You have a strategy, now you see another person doing something else, now you want to join the person do it, now you ended up losing everything. So that's not how we work. Strategy only increases the probable chances of winning in the market or winning your trades. Well, I kept open mind about making money than gaining experience. Only strained set of rules are applied. That's what I was trying to say. Now, if you have your set of rules applied to your trading, now you'll know that when I wake up, I do this, and I go to school, I come back around 3, I'll trade the London session, I mean the New York session, the momentum coming in, blah, blah, blah. Now, you are actually setting your own rules. We're ready to commit and be consistent with strategy, okay? Now, whatever strategy that is formed, okay, now I'm going far. Okay, the best strategy is formed around supported statements, meaning that if an area is supported, remember that we have a what? A push pressure, a buying pressure, and a selling pressure. So you have to understand at what statement are we on? Is the statement justified? Is the statement just or not? This boosts accuracy and improvement of your signals. Now, when I say that the market can actually give you a false statement, unsupported statement can always be changed. That's where the market maker is playing around. You have to find those areas, make sure that you identify how they actually play that out, spot the area that you want to enter. That will always give you a bigger piece of cake than a smaller one, right? Because if a statement is supported, you know that this is correct and it is going to go my direction. If I can see that the trend is confirmed, I would definitely know that I definitely know that the trend will continue in a certain way. Sorry, I'm actually getting even worse, so I'll try to stop right here. But then this will boost your accuracy and improve less trading time to analyze the chart if your strategy is automated. If you know that once I see this on the chart, I'll do this, then you're done with the market. Okay, so there are a lot of patterns around the market that we can use. Let me just find something else that I can show you. Blah blah blah. Okay, this is shit that I was just saying right now. Okay, the most general way of describing the behavior of a price over time is the trend. A trend is simply the primary direction of the price movement in the pertinent window of time. It is easy to trade from a trend that is high. It's when it's higher or lower. Hey, closely to recognize a diagonal line, since this line may be used to predict the high or the low, meaning that identifying your support and resistance in one case, this help you to know very well where to buy and sell. Condition within a trend. You have to understand that for bullish, it's a selling pressure. I mean for bearish, and for bullish, it is a buying pressure. Okay, so do you know how a trend is? A trend is like this. It's formed of higher highs and lower highs. High high, lower high. So let me just get myself a pen. The market is formed of high high, lower high, high high, lower high, high high. What do you expect? A lower push to this area right here. The market can also come back here. You just need to know how to trade this structure. This is all. Now this area above here, boom, 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 the above lines, boom, this one is called um a swing high point. Whenever the market touches these on a trend format, is when you realize that the market is turning back for a reversal with a smaller selling pressure to only push it up, because we don't want the price to be predictable, because everyone would be rich by now, isn't it? So let me just show you the below out. Connection of high highs point is called a swing high, and a lower point is called swing lows. That's what I was trying to say. Okay, these lows, when you connect them together, we call them a swing low. Okay, and then here we call them a swing high. So now, if you're a swing trader, you know that when the market is coming to your trend line, now that's when you prepare yourself for a sell point, and you're gonna exit when the market hit this one, and you're gonna buy back to your trend line, and you're gonna sell when the market come back to this one, just like that. Things like that. That's when you identify how to buy and sell. Formation of a strategy. That's what you're gonna learn, guys, in here. And I'm really glad that already we're creating a positive energy. I just hope that I'll meet you soon on a Zoom meeting, just for clarity on some of the things, because a lot of things have been explained in many ways to fool you guys. Okay, and let me just show you something here. When the market is bearish, the breakout are going to happen on the support area. So when the market is going down, I expect the breakout to happen here, now the next one must happen here on my swing lows, my swing highs. So if I see the market pushing here, breaking out, pulling back, breaking out, pulling back, so I know that the market must start to range and go to the upper side, isn't it? These are the kind of examples that I just wanted to show you. Yeah, we get to see each other. Now, how to tell if a trend is strong? One of the breakouts will have a short pullback before continuing. I'll show these examples when we get to the chart and when we get to discuss this. But then this is the VIP book. It's not for you guys. It's not for you. This is more detailed. For free, people. But then, hey, you know how it is, man. I'll still give you information. I don't have a problem with giving people information. I don't have a problem with that. Bye bye, guys.